Good morning, everybody. I'm Ed Parcaut, and this is Mike Kelly, and we are Real Estate Jerky Daily. Appreciate you being here and enjoying the show. And if you like what we do here, just let us know and reach out and subscribe and
do
all that
those
fancy
things.
stuff.
Throw money, be sponsors.
Yeah, you could do that too. That'd be nice.
Yeah.
The radio show. The one thing I was re-looking at our last weekend's radio show when the gentleman was like, "You're a little blurry today, sir."
I am?
Yeah, it seems like it. Could be just the. It'd just be the.
Let me look at the settings.
No, you're good.
We're good.
As long as Facebook, it's just blurry in here. You follow me?
What's
nice about Facebook is it's clear on there and blurry here.
Heart.
Anyway,
so what would the guy say?
The one he was talking about, the greater sucker theory.
Oh.
Yeah.
He's always
where that, where they're buying investment properties and there's, at so much 400,000 for each unit and the rents are only 1,500. Somebody's going to come along and give you 425 for it. 8 months later. That's the greater sucker theory.
The greater sucker, yeah.
I was trying to get that to cut up, but I couldn't get it to cut up right with I don't think it'll actually in there and edit it and cut that up myself.
That's work.
Okay, well, my whole go live didn't happen over here. Oh well. Guess we're not live on somewhere.
It said we were.
Yeah, it's the it said it didn't anyway.
Oh well.
What are you gonna do?
So what do you got? You got stuff today.
Yeah, it's a lot of others. Well, mortgage applications came in lower this week, which we knew that was going to happen.
Yeah.
Let's see, mortgage they're down 2%. I'm sorry, purchases fell 3% last week and are down now 12% year over year. Refinances fell 2% and now are up 12% from last year. Interest rates rose from 6.75 to 6.875 last week. That's last week, roughly 0.5% higher than this time last year. However, this week they're even higher. I had somebody who was like, could you do better on that interest rate? Because I'm a negotiator. Don't know if my dad told you. And I'm like, well, first of all, I don't get paid on rate anymore.
Yeah.
And I always look at costs, not the, So it's her loan amount's 192,000. Well, there's a hit for that size of a loan amount.
Right.
If you're 400,000, we have some room to work with. I can do some other stuff. But she's like, because last week when I was talking to these other people, they were at this rate.
Well, that was last weekend.
Yeah, exactly. Last week. Yesterday we were up 6. We lost 60 some basis points yesterday, and we're back 14. So it must be a whole different world today with better rates.
Yeah, it's probably with that one guy said something over.
No, it's
in the
inflation. No, it was the whole inflation report that came out yesterday. The CPI that came in hotter than expected, and they think the next one is even going to be hotter. Like instead of 3 something, 5%.
Holy crap, that's a lot.
Yes,
that's not a tenth.
No, like some major numbers, and that's going to cause rates to go worse over the next couple months.
Right.
And then because of that, plus the retail sales finally coming out where it's not as great because of the fact that people don't have the discretionary income that we've been talking about, we're going to then start seeing the rates go down. Third quarter, fourth quarter, and I keep predicting they're going to have to move it faster than what they thought. Not the mortgage rates because that's an automatic thing, but what the Fed does.
The Fed does.
Yeah. So, and if you look at Chicago Fed President Austin Goolsbee, I can say that fast 3 times.
Austin Goolsbee
made some dovish comments in response to yesterday's hotter CPI inflation report. I didn't put this over here because I didn't know until
to read it.
Yeah, right. And so we'll still consider a path back to their 2% goal. He said that the Fed focuses on PCE, not CPI, for their 2% goal, and the PCE is running much lower. That comes out later this week. Actually, I think comes out next week.
That was dovish.
Yeah. Oh, yeah. It's just monetary policy is the difference between that. Bottom line, they think they're on the right path. They don't care what happens to us. Everybody says they're going to drop it because the election's coming down. They're going to wait till the last minute for that to help.
Once Michelle Obama announces her run.
Yeah, somebody. I don't think it'll be her. It'll be more like Oprah or The Rock. They need somebody.
Or both of them.
Yeah, somebody better than where they have it now.
Yeah.
I already talked about
mortgage. We would be screwed.
Yeah, because I like The Rock.
Yeah.
He doesn't have a clue about.
He's so pretty.
He doesn't know anything about this other stuff.
Yeah.
His ex-wife handles all his finances.
Yeah,
and does an amazing job.
I think Mike didn't like, or did he like? He's got stars in his eyes, doesn't he?
Who?
McClanahan.
Oh yeah, he's like, oh, I'm so happy for that. That would be amazing.
I don't think he runs the same line as our politics,
which is we're all in the middle and we
very
just want
conservative.
You to stay the hell out of
our
Okay,
Get about our lives.
We're all in the middle. Pretty much 90% of 90, I'd say 98% of us are all in the middle.
Right.
The 2%, one on each side, just messes everything up. All right, Zillow. I think we talked about this last week.
We did.
Unfortunately, said that name again.
I know.
There's a lot of
they don't get any money
competition
when we
out
say
there.
it.
26.4% of homes sold above asking price. Actually, negative 26. So a quarter didn't, which is up 2.5% from last year.
Huh.
Yeah, 8% for pre-pandemic levels. Inventory remains tight. Shocking.
Yeah.
Does it?
Really?
No
Have
way.
we built anything?
No.
We gonna?
No. But I did see that. I know you have numbers, right?
Yeah.
I don't see them in the thing here, so
they'll be there in a second.
U.S. foreclosure activity did pick up in January.
Really?
Yeah. But,
okay.
We're nowhere close to where.
Well,
so in total, 32,270 U.S. properties received a default notice in January, right? So if you times that by 12, that's a little bit hotter than our normal yearly foreclosures is between 240 to 260,000.
Yeah.
So it is a little hotter than our normal, but that doesn't mean that they're all going to go in foreclosure. That's just the notice.
Yeah. And what is it? What do we have different this time? Equity.
A lot of equity. People can
so
sell.
They can refi. They could sell. They could do whatever they want to do.
Well, they can't refi. Remember this. You can't get a private money loan on your primary residence. The Obama administration changed that. I don't remember. We used to have these people who come in and say, you have a fallout on your home purchase? Don't worry, call us. We'll get it right done with the private money.
Now he's protecting the consumer.
Yeah, supposedly protecting the consumer. So you run into that problem, ability to pay rule, the fact that it has to be a non-QM or has to pass certain tests. So you can't do the savings that we used to be able to do with the loan. You have to sell.
Gotcha.
That's what you're going to have to do. Delaware, Nevada, and Indiana had the highest foreclosure rates in the country because people realize it's hot here in Nevada. I didn't know it was so hot.
What about Delaware, though?
I don't know. I've never been there.
Have you been there? No, I haven't.
Yeah. They're great for starting a company in because you don't pay taxes.
True.
The 19 states saw an increase in completed foreclosures from December to January. Michigan, Minnesota, California, Pennsylvania, and Missouri posted the largest monthly increases.
Missouri.
But hold on. California, it's a big freaking state.
Right.
There's 40-some million people in the state. So, of course, we're going to have higher numbers than other states. I can get this book out, How to Lie with Statistics. I can show that to you.
Yep.
New York, Houston, Los Angeles. It's fun. So these must be cities. New York, Houston, Los Angeles, Miami, and Chicago recorded the greatest numbers of foreclosure starts in January.
Makes sense.
Yeah, because it's New York and Miami.
And Los Angeles and Miami.
Yeah.
Huge cities.
Well, Miami's going, okay, we just increased all these values and people don't have jobs. It's a lot of LOs, real estate agents who've been holding on, just can't hold on any longer and say, okay, I can't do this. I'm not making enough money.
I'm out.
Yeah. We talked about inflation. California, that was yesterday. Cost of living. That's about all I have for today.
That was pretty depressing.
Tomorrow is initial jobless claims, retail sales, National Association of Housing Builders Housing Market Index. That's a mouthful.
Yeah, it is.
She said. Industry production and capacity utilization. Friday's PPI. I think next week will be CPI. The PCE.
Next year. PCE. Numbers might be better if we wait till next year, though.
Yeah, it probably will be.
Probably more than a tenth.
I heard stay alive till 25.
Yeah, we said that in 23, and we said it just can't be.
Don't take a pee.
Okay.
Move on.
Moving along.
Can you show your number?
I can do it right now. Watch this.
I'm waiting.
Look at that. Oh, look. Can you see?
Yeah, I'm going to go here. You can scroll that up.
Yep.
There you go.
So, I don't know. Is that up 354? That's a little
What's
up.
the close? Close is up because our average has been 280 something. So,
yeah. 294.
Yeah. Is that a month?
That is 6 weeks.
Yeah. Then it's not up.
It's up from last week by about 11.
I'm just saying it's not up it's not a lot of closings, not a lot of actives. This is Stanislaus County though, right?
This is just Stanislaus County. And you can see why we're talking the way we're talking is there's just not you thought last year's inventory was tiny. Look at this year's.
Yeah. It must be cold out there.
Well, it's not that cold. Anyway, moving along, numbers remain low. Put it that way.
Yeah, and a lot of people are looking at taking commercial property and turning it into residential property. Like, you've seen people take a firehouse and turn it into a single family home,
Yep.
or they'll take a commercial building and that's in downtown somewhere and convert it to a single family. You run into issues with that because of how is it zoned. A lot of people go, well, there's a lot of equity in it, and don't you want my loan? No, well, we look at, hey, if this loan goes bad, how easy is it to sell?
Right.
Those two types of loans are going to be very difficult to sell, and or property are going to be hard to sell. Is what I mean. Is if you don't make your payments.
Yeah, you got a very little small market,
right? And
that says, "Oh, I'd love to live downtown."
Well, it's just the issue with the zoning. You in some downtown cities, like even us, we have older homes that were single family homes that are now deemed commercial, that you could put a business in, even though they're a single family home.
Right.
Those you just get a rebuild letter and we're fine.
Right.
Okay. Because it says it can get rebuilt to the original what it was. You don't have to make it a commercial building.
Right.
I have a property that they came to me on up in somewhere, I'm not going to say where, and it was a commercial building, older style one from the 1900s, and they went single family, and they're like, I hear they're going to be difficulty getting a loan. Yes, potentially. And I went and told them what to do, and we'll see. But we'll see. Just be careful doing that or buying that stuff. You're going to have to potentially go with a different type of loan. And it's just like I had somebody come to me wants to buy a piece of property with 2 manufactured homes on it on a permanent foundation.
Okay. And can't do it.
It's unique. You have to go to a few banks that have portfolio.
Because you simply don't have comps, right?
No, because you have messed up. So it's just like if you have a single family home and you slap a manufactured home on a permanent foundation in the backyard, that messes up that transaction also. If you're going to do a single family home and put something in the backyard, or another unit on the property, modular, not manufacturer.
And don't put it on a foundation.
No, put it on. No, modular is a stick-built house built in a factory, brought out on site and put together. That's fine. It's just a manufactured home is what most people used to consider a mobile home, and it's not seen as the same thing. It's the ugly stepchild of the industry.
Yeah, but if you take the wheels off, it becomes a home.
You attach it to your truck and drive around. It's still a home.
It's still a home. It's just mobile.
It's just, again, these are things that are outside of what messes with the average people being able to do a transaction on the property. It's like if you have to go manual underwrite on something because you don't have any credit, or you have this, there's a limited amount of companies that do that, and you just limited. Same thing with those type of, and somebody will do it. It's just going to, you have to find that person to do it.
That's where, before you do something, talk to a realtor or talk to a lender.
Actually, I talked to a lender because the other one's going to tell you whether or not you can get it done.
Yeah.
I'm probably going to be able to get that other one done. It's just going to take some work.
Which you're not afraid of.
No, but if don't come to me and tell me, that did your dad tell you I was a negotiator, that client, I'm like, that's great, but
that's wonderful.
Yeah.
And you get a difference of time, and the market changes with time.
Well, they just didn't like the rate. And I'm like, well, that's because the loan amount and this and that. And I could go lower and you can pay for it just like everybody else is going to do. But I don't think paying $3,000 for $60 cheaper in a payment is worth that.
No, that's a long time to recoup.
Did I say $24,000 or $2,400?
You said $24,000.
I meant 100.
Okay.
So even that, so you take 2,400 divided by 60, that's a lot of months to pay yourself back. And you're going to refinance in 12 months or 24 months anyway. The only time that makes sense is if you're saving $100, then you've set off for the next 2 years and refinance in 2 years.
Right.
But there's so many other costs that you should worry about. Insurance. Why did you use that escrow company with the high fees instead of, there's so many other places to lower your costs.
Right.
Yeah. Am I bitching?
No, you just, you're speaking some truths, and a lot of times you just can't negotiate rate.
Well, the rate, we don't get paid off. I don't think people understand. We don't get paid off rate
anymore.
Yeah, we haven't since
For years.
2008 or whatever.
Yeah.
When they thought that
That whole debacle.
and that was bad because it was all whoever the good negotiator was at the time could make more money than somebody else, and if you didn't shop around. Now it's all based off a loan amount,
right?
And everybody sets their commission ahead of time. Yeah, some places have higher commission and their rates are going to be higher, and some people have a little bit lower commission, and so their rates are a little bit lower, and that's how that works.
Yep.
I know who I'm up against. They can't even close normal loans.
That sucks.
Yeah. Well, that's just how people are. Well, and then the same company pulled a hard pull 3 times on them.
It's my Lord.
Yeah. Well,
why?
And then my credit card, and this is what we talk about, that they sell that information. She goes, yeah. And then I got a call from my credit union going, hey, I see this. And then I told them about the property. Yeah, we can't do that.
Yeah.
Property.
Yeah.
Let me call a friend of mine at a bank. Oh, they can't do that property.
Yeah. Oh, a bank. There's someone running for, I believe it's for the Senate, and she's a Democrat, and she says she's going to work with the banks to create more affordable housing.
All right, because it's always the banks that are in
the can you explain to me what I'm missing?
Yeah.
How are you going to do that?
How about the one that's running for the Democrats that's running for our state capital, wanting to increase the minimum wage to $50 an hour?
$50 an hour. Yeah.
That's not going to put anybody out of business.
Oh, wait a minute. Let me think.
Guess what I'm going to
do? Yes, it will.
I'm going to go be a loan officer at a bunch of different companies.
Yeah.
And then when they go, you haven't produced anything after we just paid you $20,000. Oh, sorry.
Yeah.
Fire me.
I'll go to the next one. I'll go to the next one.
Because the loan officers have to get paid.
I saw her news conference yesterday, and she said, well, I was a successful business owner for 11 years. So
what happened in the 12th year?
Yeah. No longer successful.
She's older too.
Yeah.
So when was that successful business? Well, I only had to pay minimum wage of like $5.
$4.27 an hour.
Anyway, we're done.
Yeah, we are
complaining about where everything is.
I can complain about one more thing.
What's that?
Have you seen the anti-Steve Garvey commercial?
Mm-mm.
Adam Schiff's
lefties. Give me a break.
Yeah,
that dude. I mean, I have the proof of this was going on. Where's your proof? I didn't have it. I
lied. Yeah, I lied. What did I do? Oh, I lied about everything. So it starts out, Steve Garvey is too conservative for California.
Yeah, because that's what we don't need is conservative.
Yeah. Give me a break. The sad thing is California is way too blue and a bunch of ding dongs. If you think they actually are doing something for you, vote for them. Yeah, but how can you be that blind?
Let me just say, it's not because they're the party.
No,
all right, it's not a Democratic or Republican.
It's
the issue is they're hiding the fact that they're in that party, but they're not really that party.
Right.
That's the issue. They do what's best for them, not what's best for the consumer, not best for him. Think how many people we need to help, and they're sending the money to other places instead of helping us here. We could do a lot of that $60 billion that you want to give.
We need a cleansing on the left and the right.
We need a cleansing across the board and put term limits in. Let's just go from there. All right, we're done today.
We're done.
All right, and
thanks for listening.
Hopefully, we'll be back tomorrow if we didn't get canceled today.
Wait, who cancels us? That would be you.
They could try.
We'll
be on the radio anyway because that's the last free press. And anyway, that's all I have. And make it a great day. Thanks for being here. If you didn't catch any of the podcasts, this live, you can get it on the podcast later in about an hour because we got some radio stuff to do today.
Yeah. So good to see you guys.
Yes. You saw them?
I know.
Good. Make it a great day. Thanks for being here. Talk to you tomorrow.
Peace.
Bye.